What's happening, crypto enthusiasts? Get ready, because the news cycle is absolutely exploding, and you're about to get the inside track on updates that could reshape the financial world as we know it. We've got seismic shifts in corporate treasuries, a potential new era for safe haven assets, and critical market indicators flashing red for bulls. Plus, a major player is making waves with a massive gain and an eye on a prestigious index. You do not want to miss this. Stick around because this is Bitcoin Bulletin, and we're diving in now. First up, we're talking about the titans of industry and their growing love affair with digital assets. Public companies are now holding over 1 million Bitcoin, and one company, in particular, is leading the charge with an astonishing $70 billion in holdings and a massive unrealized gain. This isn't just about accumulation. It's about rewriting the very rules of finance and potentially influencing major market indexes. Then, we're shifting gears to explore whether Bitcoin is charting a new course as a go-to safe haven asset, potentially decoupling from traditional benchmarks like gold. Could we be entering a new era where digital gold takes center stage in protecting wealth? We'll break down the signals and what it means for investors looking for stability in uncertain times. And if that wasn't enough, we're diving deep into a key bond market index that's sending shockwaves through the crypto community. Is this a storm on the horizon for Bitcoin bulls, or just another sign of the market's complex dance? Finally, we'll wrap up with a look at a significant player's massive gain and their ambitious plans for index inclusion. Don't forget to smash that like button, subscribe, and ring that notification bell so you never miss a beat. Corporate treasuries are rewriting the rules of finance. Public companies have now surpassed a monumental milestone, collectively holding over 1 million Bitcoin. This isn't just a number. It's a powerful signal of institutional acceptance and a fundamental shift in how corporations view and integrate digital assets into their financial strategies. Leading this charge is Strategy Inc., formerly known as MicroStrategy, which has become a behemoth in corporate Bitcoin acquisition. The company, under the leadership of CEO Michael Saylor, boasts a staggering $70 billion in Bitcoin holdings on its balance sheet. This aggressive accumulation has not only positioned Strategy as a major player, but has also resulted in a remarkable $14 billion unrealized gain, bringing it tantalizingly close to meeting the criteria for inclusion in the prestigious S&P 500 index. The potential inclusion of Strategy in the S&P 500 is a topic buzzing within financial circles. Analysts at Stephens Inc. have projected that if Strategy is added to the index, passive funds would likely acquire approximately 50 million shares, translating to an estimated $16 billion in purchases based on current market prices. This scenario represents a significant institutional validation of Michael Saylor's conviction in Bitcoin as a strategic corporate asset, a strategy that has often been met with skepticism. More crucially, it would offer indirect exposure to Bitcoin for a vast array of institutional investors, including pension funds, without requiring them to navigate the complexities of direct cryptocurrency ownership. Meeting the S&P 500 inclusion criteria, which include robust liquidity, consistent profitability, and substantial market capitalization, Strategy has reportedly met and exceeded these requirements. Its float-adjusted liquidity ratio is said to be among the highest for any company considered for the index's next quarterly rebalance. Strategy is currently listed among a cohort of 26 potential entrants, a group that includes other notable companies like AppLovin Corp., Robinhood Markets Inc., and Carvana Co. The potential addition of Strategy to the S&P 500 would signify the index committee's recognition of the burgeoning influence of digital assets in the broader financial ecosystem, especially following previous inclusions of companies like Coinbase Global Inc. and Block Inc. Meanwhile, another significant corporate Bitcoin holder, 21 Capital, is also making substantial moves. Established in 2025 through a merger, the firm began with over 42,000 BTC and has since grown its pro forma enterprise value to $3.6 billion. CEO Jack Mallers has articulated an ambitious goal to expand the firm's Bitcoin holdings to approximately 43,500 BTC, while aiming to maintain an average purchase price close to $87,280 per coin. 21 Capital is not just focused on accumulating Bitcoin. It plans to become a comprehensive provider of crypto-centric financial products and services. Jack Mallers has put forth an exceptionally bold forecast for Bitcoin's future, suggesting it could reach a staggering $500 trillion market cap. This projection, based on the current circulating supply of roughly 19.91 million tokens, would imply an individual coin price of around $25.11 million. While this outlook surpasses even Michael Saylor's predictions, it underscores a growing conviction in Bitcoin's potential as a preeminent global store of value. Mallers also emphasized the critical need for an entity that can effectively bridge the gap between cryptocurrency exchanges and corporate treasuries, a role he firmly believes 21 Capital is uniquely positioned to fulfill. The overarching trend of public companies increasing their Bitcoin holdings highlights the cryptocurrency's expanding role in corporate finance. As more entities adopt Bitcoin as a strategic asset, total corporate holdings continue to climb, with firms like Strategy and 21 Capital spearheading this movement. This phenomenon not only demonstrates institutional confidence in Bitcoin, but also points to a significant evolution in how corporations approach treasury management in an ever-changing financial landscape. Hold on tight, because the story doesn't end here. We're about to explore if Bitcoin is forging its own path as a safe haven asset. Next, we're diving into a critical bond market indicator that could spell trouble for Bitcoin bulls. A new era for safe haven investing. The traditional landscape of safe haven assets has long been dominated by gold, a precious metal that has served as a store of value for centuries. However, recent market dynamics and the growing adoption of Bitcoin are prompting a critical question. Is Bitcoin beginning to carve out its own niche as a primary safe haven asset, potentially decoupling from gold's traditional influence? This shift could signal a fundamental reevaluation of where investors turn during times of economic uncertainty and market volatility. The concept of a safe haven asset is rooted in its ability to retain or increase its value during periods of broad market turmoil. Historically, gold has been the undisputed king, prized for its intrinsic value, limited supply, and historical performance during crises. However, Bitcoin, with its decentralized nature, finite supply, and increasing institutional adoption, presents a compelling alternative. Its digital scarcity, akin to gold, and its growing acceptance as a store of value are challenging the established order. The narrative of Bitcoin as digital gold has gained traction as more institutions and even nations have begun to allocate portions of their reserves to the cryptocurrency. Unlike gold, which can be cumbersome to store and transport, Bitcoin offers the advantage of digital accessibility and global transferability. This ease of access, combined with its robust security features, makes it an attractive proposition for investors seeking protection against inflation, currency devaluation, and geopolitical instability. Furthermore, Bitcoin's performance during recent market downturns has been a subject of intense scrutiny. While it has experienced significant volatility, its long-term trajectory and its ability to recover and reach new highs suggest a resilience that appeals to a growing segment of the investment community. The increasing correlation, or sometimes uncorrelated movement, with traditional assets like gold is being closely watched. If Bitcoin can consistently demonstrate its ability to act as a hedge against economic uncertainty, independent of gold's performance, it would mark a significant evolution in its role within the global financial system. This potential decoupling from gold could have profound implications. It might lead to a diversification of safe haven strategies, with investors allocating capital to both gold and Bitcoin based on their specific needs and risk appetites. It could also attract a new wave of investors who are more comfortable with digital assets and less attached to traditional financial instruments. The growing narrative around Bitcoin's institutional adoption, as seen in the previous news item, further bolsters its credibility as a serious contender in the safe haven arena. Analysts are divided, with some arguing that Bitcoin's volatility still disqualifies it as a true safe haven, while others point to its increasing adoption and its potential to act as a hedge against systemic risks that traditional assets may not fully address. The ongoing development of the Bitcoin ecosystem, including institutional-grade custody solutions and regulatory clarity, will play a crucial role in solidifying its position. The question remains whether Bitcoin's unique characteristics will allow it to transcend its speculative origins and establish itself as a legitimate and indispensable component of diversified investment portfolios seeking safety and stability. But what happens when traditional markets show signs of stress? We've got a key indicator that Bitcoin bulls need to watch closely. Stay tuned as we break down the bond market's surprising message for crypto. Bond market signals looming challenges for Bitcoin bulls. The current Bitcoin bull run, which has captivated markets, is facing headwinds. Stalling price action, coupled with consistent sales from long-term holders and a noticeable slowdown in Bitcoin ETF inflows, has already raised concerns among investors. However, a lesser-known but critically important market variable is now flashing a warning sign for Bitcoin bulls, suggesting that new challenges may be on the horizon. This variable is the MOVE Index, a key indicator of bond market volatility. The MOVE Index, developed by Harley Bassman, a former managing director at Merrill Lynch, measures implied volatility in the U.S. Treasury market. It's calculated using a weighted average of option prices on one-month Treasury options across various maturities, including 2, 5, 10, and 30-year Treasuries. Essentially, it captures the collective anticipation of market participants regarding future interest rate movements and the overall stability of the bond market. A rising MOVE Index indicates increasing expected volatility in Treasuries, which often has broader implications for financial markets. In recent days, the MOVE Index has experienced a sharp surge, climbing from 77 to 89 in just 3 days. This represents the most rapid increase since early April, a period when geopolitical tensions and trade policy shifts, including U.S. tariffs, caused significant market turbulence, leading to a notable dip in Bitcoin's price to around $75,000. The current spike in the MOVE Index, therefore, is a development that Bitcoin bulls cannot afford to ignore. Compounding the concern, momentum indicators such as the MACD are signaling a distinct bullish shift within the MOVE Index itself. This suggests that the index is poised for further gains, which, paradoxically, is bearish news for riskier assets like Bitcoin. Historically, periods of heightened expected bond market volatility, as indicated by the MOVE Index, have been associated with global liquidity tightening. U.S. Treasury notes are fundamental to the global collateral pool, acting as highly liquid and safe assets that reduce credit risk and facilitate the smooth flow of funds across financial markets. When volatility in Treasury notes increases, it tends to disrupt this liquidity, driving up borrowing costs and creating ripple effects throughout credit markets and the broader financial system. Lenders typically demand higher risk premiums, and market participants tend to shy away from riskier investments, ultimately slowing down the movement of capital and increasing stress across global markets. This phenomenon often prompts bondholders to reduce their exposure to longer-dated, higher-duration securities in favor of shorter-term instruments or even cash, a behavior known as a flight to quality or flight to safety. This flight to safety often coincides with broader market sell-offs, as investors reduce their exposure to equities, corporate bonds, and other risk assets in an effort to preserve capital amidst uncertainty in the Treasury market. Consequently, there's a well-established historical correlation. Bitcoin's price rallies have typically occurred during periods when the MOVE Index was in a declining trend, and vice versa. The latest bounce in the MOVE Index could therefore exacerbate the current pressures on the Bitcoin market, potentially leading to a deeper price pullback. It's a complex interplay of markets, but we're not done yet. We're heading back to the corporate world for a truly eye-watering gain. Don't go anywhere as we reveal a massive profit and a strategic play for index inclusion. A $140 billion gain in S&P 500 ambitions. In a stunning display of financial strategy and market conviction, Strategy Inc., formerly MicroStrategy, has reported an extraordinary unrealized gain from its Bitcoin investments, reaching an astonishing $140 billion. This remarkable figure underscores the success of their aggressive Bitcoin accumulation strategy and positions the company as a leading example of corporate adoption of digital assets. The company's substantial Bitcoin holdings, which have been steadily growing, have now translated into a massive paper profit. This gain not only validates the vision of its leadership, but also highlights Bitcoin's potential as a significant asset class for corporate treasuries. The sheer scale of this profit demonstrates the transformative impact that strategic Bitcoin investment can have on a company's balance sheet. Beyond the impressive financial results, Strategy Inc. is now setting its sights on an even more significant milestone: potential inclusion in the prestigious S&P 500 index. This move, if successful, would represent a monumental step for both Strategy and the broader acceptance of Bitcoin within traditional finance. Inclusion in such a widely followed index would bring unparalleled visibility and likely trigger substantial inflows from passive investment funds. According to projections from financial analysts, if Strategy Inc. were to be added to the S&P 500, passive funds tracking the index would be compelled to purchase a significant number of shares. This would amount to billions of dollars in new investment, indirectly exposing a vast array of institutional investors, including pension funds, to Bitcoin's performance without the need for direct acquisition. It's a testament to how corporate entities can act as conduits for broader market participation in digital assets. Strategy Inc. has reportedly met the key criteria for S&P 500 inclusion, including market capitalization, liquidity, and profitability. Its strong financial performance, significantly bolstered by its Bitcoin holdings, has placed it firmly on the radar for index inclusion. This development is being closely watched as it could set a precedent for other publicly traded companies holding significant amounts of Bitcoin. The company's aggressive approach to Bitcoin accumulation, spearheaded by its CEO, reflects a deep-seated belief in Bitcoin's long-term value proposition. The $140 billion gain is not merely a snapshot in time, but a reflection of a sustained strategy that has paid off handsomely. This success story is likely to encourage other corporations to explore similar investment avenues, further accelerating the trend of institutional adoption. As Strategy Inc. navigates the path toward potential S&P 500 inclusion, the financial world will be watching closely. Its journey highlights the evolving nature of corporate finance and the increasing integration of digital assets into mainstream investment portfolios. The implications of this move could be far-reaching, potentially reshaping investment strategies and the perception of Bitcoin as a legitimate corporate asset. And that wraps up our deep dives for today, but we're not quite done yet. Stick around for a rapid-fire recap of all the major headlines and our full call to action. That's a wrap on today's explosive Bitcoin bulletin. We covered the massive corporate Bitcoin adoption with Strategy Inc. leading the charge towards S&P 500 eligibility. We explored Bitcoin's potential decoupling from gold and its rise as a new safe haven asset. We warned about the rising move index signaling potential bond market volatility impacting bulls, and celebrated Strategy's incredible $140 billion Bitcoin gain. If you found this information valuable, do us a huge favor. Smash that like button, subscribe to the channel if you haven't already, and ring that notification bell so you're always in the loop. Also, follow us on all social platforms for more real-time updates. Thanks for watching, and we'll see you in the next one.